Welcome back to my channel for another video. So this week what I want to talk about is swing trading. Now obviously the majority of you that are watching this are going to be retail day traders that want to diversify their portfolio. Now not necessarily into different instruments, but in terms of some different approaches to the same instrument. So I think it's really key that we need to identify, first of all, that the majority of you out there that are trading with a relatively small amount of capital. So the majority of you want to keep that capital to day trade, whether it's the European Open, US Open, US Close. So, but you also want to swing trade, but yet if you swing trade, it's going to take away that margin from what you need to day trade. And it's always a battle between, whether you should day trade and scalp the open and the close or swing trade. It's something that traders, especially at the start of their career, really struggle with. What should they do? Well, I have the answer. And the answer is, using my strategy, not only can you still day trade the European Open, US Open, US Close, you can also swing trade. Okay. Now, when I say swing trade, I mean intraday swing trade, which means that you're only holding the position for, it could be half an hour or maybe 2 or 3 hours. And it's also in between when you're going to be scalping. So, my approach to intraday swing trading is that you trade after the European Open, okay, before the US Open, after the US Open, and before the US Close. Okay, so you're really maximizing your capital and your margin. Okay, and this is a very good strategy that I implement, and I have been implementing now for a number of months. Ever since I went full-time trading, not only do I scalp, the European Open, US Open, US Close, I also intraday swing when I see an opportunity. Okay, so, and also with this you can use quite a lot of your margin. Okay, so I wouldn't suggest using all of your margin, because you need some margin, for to allow the market to move. Otherwise, potentially, you're not going to have any margin to maybe hedge if you want to hedge. So with this strategy, what you're looking for is you're looking for space to be created. Okay, so a perfect example of that is if you say trade the European Open, so by 8:30 you're done, because you usually just trade between 8, 8:30, and your capital is then fully available. Okay, it's fully available until the New York Open. Okay, so London time, which is 2:30. So in between that time you have an opportunity to maximize your capital as well, but you can't just place a swing for the sake of it. So again, what you're looking for is you're looking for space to be created. So you're looking for a significant rally or a significant sell-off, and basically what you're doing is buying the dip or shorting the rally. And what you're looking for is, you're not looking to hold this for several hours, trying to make a stupid return. You're just looking for, you could be holding it for maybe half an hour or an hour. Okay, and then you're out, and then you allow the market to move again, and then you look for the next rally or the next sell-off, and you do the same again, and you do the same again. Now listen, you only do it if the opportunity presents itself. If the opportunity doesn't present itself, you don't take a trade. And the great thing about this strategy is your capital is not being tied up for days or weeks or months at a time, because it's so frustrating. Obviously, I've been trading for over 2 years now and experimented with various different types of trading and different approaches, and there's nothing as frustrating as getting caught up in a swing where the majority of your capital is caught up in that position, and you don't have enough capital to scalp the opens and the closes. Very early on in my career, I identified this and put this plan into place, more so when I became a full-time trader. So this strategy is the absolutely best strategy, or best way to maximize your capital if you are a retail day trader. Okay, a retail day trader. And if you are out working and you can't scalp maybe an open, and you see an opportunity, i.e. a rally or a sell-off, You know, even if you're in work, you know, you can place that intraday swing and leave it for half an hour or an hour, you know, making sure that you're keeping an eye on it, and you're still getting the opportunity to trade. Because I know there's a lot of you out there that are, you know, working full-time jobs, so maybe you don't have an opportunity to trade, you know, the European Open, US Open and US Close. Maybe you can only do one of them. Or maybe you're in a job where, you know, if you're not off on holiday, or if it's not one of your allocated rest days, that you can't trade the stock market at all. But at least with this strategy, you can still trade, and your capital is not getting tied up for days at a time. You know, it's only getting tied up for half an hour, you know, maybe 2 hours. You know, typically on these intraday swings, I only usually kind of hold them for about 2 hours in between, you know, the opens. And it means that when it comes to the next open, you know, my capital is free. Okay, so it's an intelligent way to maximize your capital, because as retail traders, the majority of you watching this, you're not going to have a huge amount of capital. You know, maybe some of you do, but I would say the majority of you are still, you know, in the initial stages of your journey. So it is important that you maximize your capital, because you don't have unlimited resources of capital and unlimited, you know, resources of margin. So you have to be intelligent in terms of how you do it. Now, I've only got to this stage because I've experimented so much at the start of my career just to see what worked, and this truly does work. It truly does work. Intraday swing trading is the way forward for a retail trader. Now, I know a lot of these hedge funds and these, you know, multi-million dollar hedge fund companies, banking institutions, etc., they'll all tell you that, you know, long-term investing is the way forward. That's the best way to get a good return. Yeah, well, that's okay for them, because they have billions and billions of dollars to invest, and it's not even their own money. You know, they're professional traders, so they're using investors' money. They're not using their own money. So we have to be smart in terms of how we utilize our funds as retail traders, and this is the way. This is the way forward. Give it a try. Okay, give it a try for a couple of weeks. Let me know how you get on. Give me some feedback on this. It works for me. It works for me. I've seen a lot of my students now that are also implementing it, and it's also working for them. So I hope you enjoyed this week's video. Hopefully you got some kind of value in terms of the best way to maximize your capital and your margin. As usual, guys, please make sure that you smash that like button, subscribe to my channel for more videos like this, and as usual, if you want to contact me, you can contact me at my Instagram, and that is sambora.00. The Sambora family is growing fast. Why is it growing so quick? Because the success of the community. That is the only reason. If the community wasn't successful, we wouldn't continue to have people joining it. So that in itself is a demonstration of the teachings and of the community and the support that we all give to each other. So again, if you want to find out more about what I do with my students and the financial community, drop me a message on Instagram and I'll reply to you. Learning is when you actually join the community and you're in the community every single day, okay, and you're putting what you've learned into practice. That's where the real true value is being part of the community on a daily basis. Okay, so hope you enjoyed this week's video, and I'll see you again next week for another video.